Hello and welcome to the weekly market metrics. We are in week 50 of the year, just 2 more weeks to go in 2025. Incidentally, I was reading this article in Psychology Today about time perception and age. Science actually supports the idea that we feel time is speeding up as we get older. The article also suggests ways to solve for it. If you want to nerd out on it, I'll share the link in the show notes. Over to the markets, and it's time for our weekly dose of market metrics. Nifty saw a volatile week once again with selling pressure in the first half, followed by a recovery towards the end of the week. After making a fresh swing low early in the week, the index bounced sharply from lower levels and managed to close near 26,050 mark. Felt as if the markets reacted late to the Fed's 25 basis point rate cut news. Even after the late recovery, Nifty remains stuck in a broad consolidation zone with neither bulls nor bears taking full control yet. The market is showing some signs of stabilization, but a clear directional move is still missing. So is this recovery as seen in the past 2 days strong enough to push the index higher, or are we setting up again for a more range-bound action in the coming week? Let's get into the charts and break down how the price action played out and what levels really matter going forward. As always, Nifty first. On the weekly time frame, after printing 3 consecutive, that is green weekly candles in November, Nifty has now formed 2 back-to-back red candles on the weekly chart. During the week, Nifty fell 140 points, around 0.53%, to close at 26,047. It made a low of 25,693 but somehow managed to hold above the 26,000 mark by the close. This 26,000 zone has become a big psychological level. It is clearly acting as both support and resistance. But the bounce from the 25,700 area and a near 350 point recovery does give some hope for the coming week. But honestly, the chart still doesn't show any real bullish strength. Nifty needs a clear close about 26,200, and only after breaking the all-time high near 26,325 can we start talking about a proper upside move. Nifty traded in a 485 point range in this week, about 1.85%, which is very similar to last week's 435 point range. This looks like a possible follow-through of the hanging man candle unless we see a strong close above the week's high in the 26,180 and 26,200 zone. That area is the first resistance, followed by the all-time high near 26,325. These are the levels to watch out for. On the downside, the immediate support lies at 25,900 and 25,800, and below that, near this week's low around 25,700. For now, my weekly outlook on Nifty remains sideways unless we get a clear close above the highs of the previous 2 weeks. Moving on to Nifty on a daily time frame, just like the last 2 weeks, the pattern repeated again. The first half of the week was completely negative, followed by a recovery on Thursday and Friday. This week, Nifty printed 3 consecutive red candles on Monday, Tuesday and Wednesday, and 2 green candles on Thursday and Friday. On Tuesday, Nifty made a low of 25,693. From that level, it bounced back nearly 350 points and managed to close around 26,050. Resistance levels remain similar to what we are seeing on the weekly chart, first at 26,200 and then at 26,325. On the downside, support is at 25,900, followed by a stronger support zone at around 25,700. As shared earlier, until Nifty manages a daily close above the 26,150, 26,200 zone, the broader bias remains sideways. For now, I see Nifty stuck in a range between 25,900 and 26,200, roughly a 300-point band, where the index may spend some more time consolidating. Over to the hourly time frame on Nifty, the index stayed below 50 EMA for most of the week and then surprised everyone with a gap-up opening on Friday, moving back above the 50 EMA. This is exactly why short trades on Nifty often feels like a mirage. Profits look good on the screen, but actually realization is usually very limited. Anyone who's been trend following on Nifty would know what I mean. By the end of the week, Nifty 50 is trading around roughly 90 points above the 50 EMA, while the EMA itself is near 25,950. Now the key level to watch is 26,000. If this level holds, we could see continuation. Otherwise, we may once again get choppy price action around the same zone. Overall, the short-term bias based on the hourly chart remains positive. Coming to the overnight versus intraday action in Nifty, there's honestly not much to talk about over here. It's the same story for the last 7 weeks with muted overnight gains. The gap down opening on Monday was completely negated by the gap up opening on Friday, and the week ultimately ended with just about 0.07% up overnight and minus 0.49% on an intraday basis. For the calendar year 2025 so far, Nifty has delivered 9.64% from overnight moves and only 1.72% from intraday moves. These numbers have essentially gone nowhere over the past 7 weeks. Now, this week onwards, I'm also tracking the straddle price to estimate Nifty's expected range till the coming expiry. Currently, the 2DT straddle is priced at 154 points. What you're seeing on the screen is a 4DT because the sheet calculates days to expiry using calendar days, not trading days. But that's the same as 2DT. What this implies is that Nifty is likely to expire on Tuesday, 16th of December, around 2647, which is spot, plus 154, which is 26201 on the upside, and 2647 minus 154, which is 25893 on the downside. So broadly, this gives us an expected range of around 25,900 to 26,200 on Nifty. Interestingly, this is very similar to the range we identified earlier using the daily chart. Starting this week, I'm also going to talk about open interest. Yes, you heard that right, but let me clarify how I'll be using it. I generally don't rely on OI to mark ranges or define support and resistances because in a highly liquid index like Nifty, OI changes very quickly during a move. On top of that, the data itself is delayed by about 2 to 3 minutes, which makes it a lagging indicator. The only real information OI provides is where the maximum contracts are positioned. I won't blindly treat these strikes as support or resistances. However, if these OI heavy strikes align with my chart-based levels and range analysis, then I may consider them. So in other words, I would think of OI purely as a confirmation tool, not as a primary signal. For this week, both 26,000P and 26,000C have the highest open interest. Now, what does that suggest? Possibly that option writers are expecting the market to stay sideways and expire somewhere around 26,000 levels. Let's see how that plays out. Over to SENSEX on the weekly time frame. After printing 4 consecutive green weekly candles, this week finally closed in the red, giving up 445 points or 0.52%. However, it also formed a long lower wick. What does that tell us? Well, sellers attempted to push the index lower, but buyers stepped in strongly around the 84,150 zone and lifted the index nearly 1,000 points from the lows to close near 85,268. Similar to Nifty, this kind of price action points to a sideways bias for now. A clear bullish bias will emerge only above the week's high around 85,700 and then above the all-time high near 86,150, which will act as a major resistance. On the downside, the bias turns bearish below 84,500 and especially below 84,150. On the daily time frame, the story is similar to that of Nifty. The first 3 sessions were red, followed by some recovery on Thursday and Friday with green candles. SENSEX appears to be stuck in a range with 85,650 acting as immediate resistance and 84,400 as key support. The next major resistance remains at 86,159. Overall, the bias for SENSEX continues to remain sideways. Now, talking about the expected range in SENSEX till expiry, the SENSEX at the mini straddle closed at 719 points, which gives us an expected range till expiry. On the upside, it's 85,268 plus 719, which is 85,987. And on the downside, it's 85,268 minus 719, which is 84,549. So if you're trading weekly strategies, then these are key levels you should be watching. Moving on to BANKNIFTY, on the weekly time frame, the index lost 387 points or minus 0.65% to close at 59,390. This week's range was around 913 points, nearly 23% lower than last week's 1200 point range. Now, what does that tell us? The range is contracting after 6 straight green weekly candles, suggesting the index may be pausing or consolidating. On the upside, resistance remains at the all-time high of around 6114. On the downside, the support is placed near the week's and last week's low around 58,800 followed by 58,600. Overall, Bank Nifty continues to remain sideways on the weekly chart. On the daily time frame, Bank Nifty printed red candles on Monday, Tuesday and Wednesday, followed by 2 green candles on Thursday and Friday. The price faced a bit of rejection near the 59,550 zone on Friday, making it the immediate resistance on the daily chart. Friday also made a doji candle. Above that, the all-time high at 60,114 remains the next major resistance. On the downside, supports are at 58,900 and 58,700. Overall, the trend remains sideways with Bank Nifty stuck between 59,550 and 58,900, a range of roughly 650 points. On the 1-hour time frame with 50 EMA, Bank Nifty chopped even more than Nifty. That's always the case with Bank Nifty. Its price action is seldom as smooth as Nifty. Bank Nifty attempted to move higher on Wednesday and Thursday but failed to sustain the up move. On Friday, it finally moved above the 50 EMA, but the price action remains pretty weak, with the index trading only about 100 points above the 50 EMA, which is currently placed near 59,290. Overall, the bias for Bank Nifty remains sideways across all the 3 time frames, weekly, daily and hourly. Moving on to the rate of change, it was a flat to negative week across all indices with week-to-date returns around minus 0.5%. We can call it a consolidating week actually. All 4 indices continue to sit close to their all-time highs except for Nifty Mid-Select, which is weaker compared to the rest. Now that we're also close to the end of 2025, let's talk about the year-to-date performance as well. Bank Nifty leads with plus 16.7%, Nifty follows at 10.16%, SENSEX sits at 9.12% and mid-cap trails slightly at 7.75%. Shifting focus to the directional bias, just like the past 3 weeks, all 4 indices continue to hold a positive short-term and medium-term bias with price staying well above 21 EMA and 50 EMA on the daily time frame. Even if some indices appear sideways to bullish, the directional bias based on the slow and fast EMAs is still clearly positive. Moving on to the top performing sectors this week, metal continues to be in the top 5 sectors again this week along with auto from the previous week. The rest, commodities, energy and infra are all new entrants this week. I remember week 44, that is the last week of October, had a very similar structure. That's when Nifty closed at about 25,700 that week. Coming week, things flipped, markets went down actually, and we had a complete theme shift except for PSU banks holding up. But don't read too much into it, it's just an observation. Let's see how things shape up in the coming week. There's another interesting thing I observed. I plotted the sectors based on the frequency of their occurrence in the top 5 rankings. Here is what it looks like. Metals showed up 9 times, bank and PSU bank showed up 8 times, auto and IT 7 times and so on. That gives us a sense of the key trends in the past 16 weeks. If you are a stock picker, this is where you will find the names. Talking about ranges and expiries, after last week's volatile Friday, this Friday turned out to be the lowest range day for all the 4 indices, as seen in the daily range column. Monday was the highest range day for all the 4 indices. Nifty's 5-day average range rose to 208 from 182 last week, confirming a volatile week, while the 10-day average range remained at 195. Now let's talk about Nifty expiry. This week's Nifty expiry opened with a gap down followed by continuation of the down move. The first 10 minutes saw an 80-point recovery, but the rest of the session was a clean downtrend with lower highs and lower lows on the 5-minute time frame. I would rate this expiry 5 out of 10 for sellers, where 1 is easy and 10 is hard. SENSEX expiry on Thursday created morning mayhem with the index moving over 500 points in the first hour and then dropping nearly 470 points till 2 p.m. The first half was tough for sellers, but the second half offered good opportunities for short vol traders. Especially with combined premium or M2M based stop losses, I'd rate it 4 out of 10 on the easy to hard scale. Talking about India VIX, it remained almost flat, down zero point 0.2 points or 2%, closing at 10.1. A low VIX indicates no fear in the market. Let's see what next week has in store. Moving on to commodities, the commodity pack this week was led by silver, which was up 9.39%. As of today, it's sitting pretty at 108% YTD gains. If you're wondering what's causing it, well, the little that I have read tells me that it's a mix of factors at play. Some are pointing to a rise in the industrial demand, and then there is FOMO-driven speculation as well. But remember, silver has historically been very volatile, so if you are in the long trade, stay cautious. In the precious metal circle, it's actually called the widowmaker as it can cause huge losses. There's a very interesting documentary-like episode about silver by Markets by Zerodha Hindi. I will share the link in the show notes. Gold and copper closed in green, up about 3% and 2% respectively this week. Crude oil was down 4% and natural gas was down a whopping 22%. Natural gas does give some good trading opportunities on the short side. That's pretty much in the commodities this week. In summary, the markets consolidated this week along with the price action in the last 2 days, plus the positive short-term bias on the hourly time frames makes me a bit hopeful. On the commodity side, it was a fabulous week for silver and solid volatility was seen in natural gas. It's been generally an okayish week for option sellers, hoping for better price action in the coming weeks. Let's see. Moving on to what to expect in the coming week. Now, next week is the third week of December and we've got a full 5-day trading stretch. There is an ECB interest rate announcement, but that should not affect us much. With the Fed rate cut done, in general, the bias seems to be positive for the markets. While for the month, the broader indexes are in red so far, I think that should change and turn December to green in the coming weeks. Fingers crossed. Yes, before I close, if you have been watching the weekly market metrics videos and if you think you would like me to include certain data points that could be of interest to you, be it in trading or active investing, do share them with me in the comments. So that's pretty much it for this week, and yes, don't forget to subscribe to the channel. Until then, stay curious, stay steady, and have a great weekend. See you soon.